In 1957, Harold Macmillan proudly proclaimed, "You've never had it so good." And for the baby boomer generation, this was true. Rising living standards, home ownership, an NHS where you could still see a GP, and a sense of ever-growing prosperity. But recent studies suggest that Millennials and Generation Z are the first generations to face falling real incomes, worse job prospects, less social mobility, and a chronically broken housing market. The young generation are increasingly pessimistic, with a majority agreeing that their economic prospects are worse than their parents. But is all the doom and gloom exaggerated? Was it really better to be born in an era where people ate spam and tinned carrots for dinner? Let's look at why the younger generation are fed up and whether it is justified. If we look at the GDP of the UK in the past few decades, there's a very clear, striking picture of rising national output and national income, which suggests at a cursory glance the younger generations should be getting better off. But there are two things to note. Firstly, since the financial crisis of 2008, growth has slowed down markedly. And secondly, the link between GDP and actual living standards is also breaking down. If we look at real wages per capita, the slowdown is more marked. The past assumption that wages would always rise has been broken. A recent IFS study shows that income for millennials is lower than the previous generation, a rare example of younger generations not being better off. Now at this point, your typical Daily Mail columnist may point out that the younger generation have unprecedented consumption, takeaway coffee, avocado on toast, and Netflix subscriptions. And talking of Netflix subscriptions, one thing the older generation definitely didn't have was the ability to subscribe to NordVPN. NordVPN enables you to improve browser security and use IP addresses from around the world. From a practical point of view, this means that when I was in the US, I could watch BBC iPlayer. With NordVPN, you can watch US-only Netflix shows and access sites blocked by region. Housing may be very expensive, artificial intelligence is taking our jobs, but that's something our parents could never even dream of. You can grab your exclusive NordVPN deal by clicking on the link in the description to get a big discount on your NordVPN plan with 4 months extra free. And it's all completely risk-free with a 30-day money-back guarantee. But the next time someone says things like Netflix proves the younger generation are better off, bear this in mind. A Netflix subscription costs less than 0.5% of average monthly rents. According to Zoopla, the average housing deposit in 2023 was £34,000. That is 575 years of Netflix subscriptions. But also the problem is more deeply seated than stagnant wages. Firstly, millennials have seen a sharp rise in student loan repayments. If you went to university after 2012, student loan repayments are a new effective tax. A graduate who earns $28,000 would pay 9% student loan repayments, making a 40% marginal tax rate. For those earning over £50,000 a year, it is an effective 51% marginal tax rate. This is a burden previous generations did not have. On the one hand, much greater numbers of people go to university, but it is at the cost of becoming a heavy financial burden. But perhaps the biggest threat to the welfare of a younger generation is housing, with record house prices, higher rents, and record levels of unaffordability. Since the 1970s, UK house prices have risen much faster than inflation and wages. It's a combination of a shortage of supply, low interest rates. But whatever the cause, the impact is a younger generation struggled to buy a house. Now, 60% of those born in the 50s and 60s were a homeowner by the age of 50. This falls to 55% for those born in the 70s. But for the generation born in the 80s, it falls to 36%. A clear sign that it is getting harder to buy a house. And those who do manage to buy, they are paying significantly more for a longer time. Homeowners in the 1970s paid an average of 9.5% interest on their home loan, with an average mortgage of $6,600. This compares to $156,000 in the 2010s and $223,000 today. This is why those who recently took out a mortgage are so badly affected by rising interest rates. The post-war economic boom helped to usher in a new social contract, with rapid building of council houses, a welfare state, healthcare free at the point of use. But many of the things that we've taken for granted are now being questioned. We lost over 1.5 million council houses, which were sold off but not replaced. Short-term politically popular, but the result is a shortage of rented accommodation, pushing up market rents and increasing the prospect of homelessness. And it doesn't help that it's often the baby boomer generation who are often the keenest to block new housing. There's definitely a conflict between the need for new housing for the younger generation and the interests of the generally older people who don't want new housing on greenbelt land. Now, the 20th century has witnessed a remarkable rise in social mobility, with a clear rise in children earning more than their parents. But since 2017, for the first time in decades, this has gone into reverse, with a decline in earnings. And as we said before, this is only a small part of the problem. Nearly 2/3 of those aged 20 to 29 have less than a month's income in savings. At the other end of the spectrum, rising house prices have seen an increase in the number of millionaire households. There's been a 400% increase to 3 million pensioners in millionaire households. While student loans have attracted interest rates of up to 7% and rents taking up to 30% of disposable income, the government have maintained an expensive triple lock. The Economist reports that if this triple lock were to be maintained for the next 20 years, pension spending could rise to over 20% of GDP. And another problem we have is that with an ageing population, combined with increased demand for healthcare, it's stressing the welfare state like never before. In the past, we could rely on economic growth to boost tax revenues. But with stagnant wages, the government have been forced to increase tax rates. And we're now at the highest level of tax burden as a share of GDP since the Second World War. Yet despite higher taxes, public services are under pressure like never before, with rising waiting lists and crumbling infrastructure. During COVID, it was a young generation who made a sacrifice of lockdowns, which was primarily for the benefit of older people who were more susceptible to COVID. But for all the economic and social costs, this generation have received relatively little in compensation, with benefit cuts hurting the poorest the most. However, is it as bad as all that? This viral chart from the Washington Post shows how boomers have had more wealth than millennials, a similar story in the UK. But also, it's misleading because it doesn't take into account there are many more boomers per se. If we look at per capita wealth, the pattern is fairly similar. One point worth bearing in mind is that wealth of parents will tend to pass down to their children. It may come later in their life, but it has to go somewhere. However, even this data needs evaluation. Wealth goes much less far than before. A millennial may own a home worth £300,000, but with a 40-year mortgage, the total cost of owning a home is substantially more. Also, the rise in house prices has caused much greater inequality, with a division between those who benefit from inheritance and parental gifts and those who don't. Some millennials are doing relatively well, but social mobility has become much more dependent on family support, and the dream of equal opportunity is declining. Also, on a more positive note, whilst income growth has stalled, it hasn't fallen dramatically. Given a choice between born now and a few decades earlier, how many would actually prefer to be born a few decades ago? I'm not sure I would. The younger generation are also much better educated, and the higher human capital can in theory increase their earning power. However, the fact that there are more people with degrees does mean the wage premium from having a degree is much less than it used to be. When 10% of a population went to university, a degree was a powerful signal to lead to higher wages. But with nearly half of the population of young people going to university, the currency of a degree has become somewhat devalued. So effectively, students are paying a lot more to get a less valuable certificate, something that perhaps could be rectified by placing greater value on vocational skills rather than the treadmill of higher education. Another point is we have to be careful of creating intergenerational conflict. Ultimately, all generations will also be pensioners, and all pensioners will want young. Rising state pensions will help millennials and Generation Z in the future. But equally, the prohibitive cost of housing is an unnecessary burden, creating stress and financial pressures on the younger generation. Very few really benefit from very expensive housing. Tackling this would help ease many economic and social pressures with relatively little cost. But it does require those who have the security of their own home to not always block the building of new houses. The truth is, living standards are better than in the past, but also things could be a lot better if we could tackle the housing crisis and some of the cost of living pressures faced by the young generation. Now, part of the problem is not the intergenerational inequality, but the general breakdown in UK and to extent global economic growth and investment. This video looks at why so many of the UK public services are under pressure and whether it can be changed.